So guys, welcome to another video. In this video, we are going to speak about the different types of trades and about what is premium discount zone. So all the main topics have been covered already. So make sure that you watch all the previous video at least 2-3 times before you come and watch all these videos, and especially the top-down analysis. Keep watching 3 to 4 times because that's the main video that summarizes all the things that we have seen from all the previous videos. Okay? So once you're clear, these are all the extra topics that I know you may refer to. So in this video, we are going to speak about the different types of traits. Let's understand the situation first that we have come across. So this is a picture of higher time frame and a lower time frame. How are we going to trade? Okay, so this is, we have the higher time frame moving in, higher high, higher low. So we have a demand here, and how to trade this demand, we have already seen that. We wait for the market to reach here. Then we go down to the lower time frame. You see the lower time frame is in downtrend. You wait for the flip. You get your demand and trade the demand. Okay, now the question is, why you are waiting for the flip? Because you have demand on the higher time frame and you need demand on the lower time frame as well to trade. But the issue is at this particular point, when the market have just reached that higher time frame of demand, you don't have any demand on the lower time frame. You just have supply. So you are waiting for the supply to break and the demand to enter. And then we can go for long. Now we have a matching lower time frame and the higher time frame. And in this, let's pick on which are the types of trades here. So all the demands, when you have demand on the higher time frame and the demand on the lower time frame, when you have demand on the high, when you have demand on the higher time frame, and when you also trade the demand on the lower time frame. Those trades will be called as the continuation entry. Now you are continuing your higher time frame trend, okay? So you have demand on the higher time frame, and you will trade the demand on the lower time frame. But the higher time frames up front, you have demand. And if you trade a supply, you see all the supply. These will be called the reversal trade. So when you are going against your higher time frame, all those setups are called reversal. And when you are going with the higher time frame, those setups are called the continuations. Now you may wonder, why would we even trade these trades? Now, for your understanding this, all trades are a part of the mitigation move of that H1 chart, the higher time frame chart. We are not even trading these. These trade. We are waiting for the market to come here, and then we are waiting for the flip and taking only the continuations. But as you keep doing, as you gain experience, you can even start taking these reversals. Why? Because even though the market is up front, let's say now the market is in upfront. Every time you say it, it comes to a demand, okay? It comes to demand. So it has to mitigate supply to reach the demand. It has to mitigate supply in the lower time frame to reach the demand. Okay, that's what it's doing. It's mitigating supply here to reach your higher time frame demand and then to the flip. And of course, we are not taking all these things. We are only waiting for the flip and taking the continuations. But as you can experience, you can also start taking the reversals as well, not when you're starting. Now, to take the perfect reversals, we use something called premium zone, discount zone. So what I can do? So you know the move. This is the impulsive move that created the higher time frame demand. Okay, so I split that whole move into 50%. Now you can use a Fibonacci tool to draw from this point to this point and mark the 50% line. Okay, the top half is called the premium zone. The bottom half is called the discount zone. The premium's only meant to sell. The discount's only meant to buy. Okay, now if you're taking reversals, now here, all the reversals are sell trades. In this example, all the reversals are sell trade. So you only want to take if it's in the premium zone. You don't take this reversal because this sell is in the discount zone, and discount is a buy zone. Okay, for continuation entry, you can buy in the discount. You can buy in the premium also doesn't make any don't matter. Because, like in continuation entry, you can ignore this premium discount. But when taking reversals, make sure they're only selling if in the premium. Or if the reversals are by then, you're only buying if it's not discount. Okay, so we draw this premium discount on the high to the lowest point of that higher time frame move that created this demand, and then split into 50%. I hope this is clear. Let me show you on the chart as well. Now, one more thing is that if you're starting, you only want to focus on continuation, so you can completely ignore other reversals that the premium discount for now. Even if you don't remember, it's okay, because for now, just focus on the continuation as you gain experience. Only you want to focus on the reversal. Now let me show you on the chart. So let's take this particular example on GBP USD. So this is a 1-hour chart. Now, I told you that we have a move creating this demand. The last down candle before that move is your demand. So I have marked the demand with this particular, so this is the demand. So let me just mark it as a dark color, yeah? So this is demand zone. Now we want to trade this demand. This is the 1-hour demand. The first thing, we wait for the price to reach here. And once the price reaches here, then only we go down to a lower time frame to take entry. Let me just darker. Yep. So this is your demand. You wait for the price to reach here, and then you go down to the lower time frame and wait for the flip and take this spread, right? So now let me show you how the reversal trade looks like in this one. So you see here, market comes here, okay? And then see, this is the 5-minute shot. This is the one on demand. And what we clearly see here, the lower time frame is down, trending. It's not uptrending, okay? It's downtrend. So when it's down, trending, we don't want to enter in that. We wait for the flip. You see the first break of structure is here. The structure is broken to the upside now, so the last supply have been flipped to a demand. And you see, demand gets mitigated. Market starts going up now, okay? So now, this demand and this demand, all these are the continuation entry, okay? So trade. You can trade this demand. You can trade this demand. All these are continuation entry, but till now, the market is coming down, right? There are also reversal entries. You see how many sell rates are there here? So you have one sell here because the impulsive more broke this previous structure. Let's zoom in, and yeah, so this input symbol broke the structure. Last up, candle is your supply. You see, market goes there and mitigates and then drops down. Let me make it little darker. And more like, we have another input symbol here. Sorry. This is boom. Also broke the structure, the sub-candles. Another supply, market comes here, breaks down. And then this is also another supply, the last of candles here. Market comes here and breaks down. Okay, so you see all the sell entries. These are all the reversals because you have demand on the higher time frame. This is the 1-hour chart. Okay, the 1 out is outtrending. You have demand on the higher time frame. And all these are sells, so these are against your higher time frame. On all these advice on the favorite, these are in line with your higher time frame. So these are continuations and these are reversals. I hope that's clear once you get the flip. And now you only have the continuations until that flip, until the market is reaching your demand. Till then, you will only have all the reversals. So for now, don't focus on the reverse. Just wait for the market to come here after the flip. Only take the continuation. But as you can experience, you can also take these reversals as well. I hope this now. Let's see which reversals are. So to mark the premium discount zone, we go down to the 1 hour. Yep. So now what we do is take your Fibonacci, and this is the highest point and this is the lowest point. You see the 50% client. Okay, let me also extend this. Okay, the 50% client. So draw a normal horizontal line at the 50%. Now you can delete this Fibonacci too, so you got the 50% client. The top is your premium, the bottom is your discount. Now let's see which sell trade are valid here. So you see the first two sell. Rates are inside the premium zone, so these both are valid. You can take this, but the third sell trade is inside the discount zone. And this is something you don't need to take, that you need to avoid this sell, okay? But for buy, you can buy in the premium, you can buy the discount, okay? For continuations, I don't really look at the premium discount, but for reversals, yes, I do look at, okay, I hope that's clear. Now, if not, please would redo, watch this video again and clear all your doubts, and that's all for this video. Now let's catch up on the next video.